Hi, everyone. Welcome. My tax accountant has put this together for us, and we're diving into a really big topic for UK homeowners, private residence relief. Now, this is a tax break you really need to get your head around. It can save you an absolute fortune, but getting it wrong, well, that can be super costly. So let's make sure you get it right.
Okay, so let's start with a question that's probably on your mind if you're thinking of selling. You've made a profit on your home, which is fantastic news, right? But does the tax man get a piece of that pie? Now, for a lot of people, the answer is a simple no, but you'd be surprised how many homeowners are getting hit with a totally unexpected tax bill.
And when I say unexpected tax bill, I mean a big one. Just look at this number, £24,000. Wow. That's the potential capital gains tax a higher rate taxpayer could be looking at on a £100,000 profit, just because their property sale didn't fully qualify for tax relief. That is a massive chunk of your hard-earned cash. Just gone.
So, how do we make sure a bill like that doesn't land on your doormat? Well, we're going to walk through it all. First up, what even is residence relief? Then, the rules for getting that full, sweet tax relief. We'll get into the tricky stuff, like when your relief is only partial, and what to do about letting your place out. Then we'll cover some special cases and common traps, and finally, how to actually claim your relief. Let's get started.
All right, let's jump right in. Section 1, what is residence relief? This is really your key to a tax-free home sale. It's the foundational rule that, for most of us, makes selling our main home a completely tax-free event.
So what is it exactly? Well, private residence relief, or PRR for short, is basically a fantastic UK tax relief. Its whole purpose is to make sure you don't pay capital gains tax on the profit you make when you sell your main home. You know, it's the government's way of saying, hey, we get it, your home is your castle, not just some investment we're going to tax.
And this is why PRR is such a game changer. Just look at the capital gains tax rates for the 2025/26 tax year. We're talking 18% for basic rate taxpayers and a whopping 24% for higher rate taxpayers. And get this, your annual tax-free allowance, it's down to just £3,000. So you can see how quickly a tax bill could stack up. This relief is pretty much the only thing standing between many homeowners and a really hefty tax bill.
Okay, so that brings us to the big question. How do you make sure you pay zero tax on your home sale? Well, that's what Section 2 is all about. Let's look at the rules for getting full relief.
Right, here we go. This is basically HMRC's golden checklist. If you can tick all 5 of these boxes, then congratulations, you get full relief, no questions asked. A couple of things to watch out for here. See where it says your only or main home? That's crucial. And the word exclusively for business use. So, using a spare room as a home office is generally fine, but if you've, say, converted your garage into a workshop that's only used for business, that's where things can get a bit tricky.
But, life is rarely that straightforward, is it? So what happens when you can't tick all those boxes? Well, that brings us to Section 3, when your relief is partial. This is where the maths can get a little more complicated, but don't worry. It's also where you can still save a ton of cash. The best way to understand this is with an example. So let's meet Saris. She's a graphic designer from Cardiff, and her situation is super common. She bought a flat, but then work meant she had to move and rent it out for a while. Okay, let's look at the numbers for Saris. She owned her place for 180 months in total. That's 15 years. Out of that, she actually lived there for 96 months. Now, here's a really important rule. The last 9 months you own a property always qualify for relief, provided it was your main home at some point. So we add those 9 months to her 96, giving her a total relief period of 105 months. The calculation is then pretty simple. 105 months divided by the 180 she owned it for times her total profit. And boom, that means £87,500 of her gain is completely tax-free.
And what does that actually mean in pounds and pence? It means Sarah's saved over £21,000 in capital gains tax. That's the key takeaway here. Even with partial relief, the saving is huge. It's definitely not an all-or-nothing deal.
And believe it or not, the rules can be even more generous. HMRC allows for what they call permitted absences. So you can be away for up to 3 years for literally any reason, and that time can still count towards your relief. If you're working overseas, it can be for any period at all. But here's a pro tip you need to remember. For many of these absences to count, you usually have to move back into the property and make it your main home again afterwards. That's a crucial little detail.
Okay, let's move on to Section 4. We're going to tackle 2 of the most common challenges people face with this stuff: letting your property out and owning more than one home.
Honestly, this is where so many people get tripped up.
Right, listen up because this is a huge one. A lot of people still don't know about this change. There used to be this extra tax break called letting relief, which was great if you rented out your old home. But since April 2020, the rules got way stricter. Now, it pretty much only applies if you're actually living in the property with your tenant or lodger. If you move out completely, that relief is gone.
And this just shows you the night and day difference between having a lodger versus renting out your whole home. If you have a lodger while you're still living there, you can often keep your full private residence relief and potentially get up to 40 grand in extra letting relief. But if you move out and rent the whole place, forget it. That extra relief is off the table and your main relief gets restricted. It's a massive difference.
Here's another pro tip for you, and this one is golden. If you own more than one home, you have a 2-year window to formally tell HMRC which one is your main residence. Why does this matter? Because if you don't tell them, they get to decide for you. And trust me, their decision might not be the one that saves you the most tax. It's a simple piece of paper, but it could save you thousands.
All right, Section 5. Let's talk about some special cases, and more importantly, some common traps to avoid. Things like trusts, divorce, and tight deadlines can really throw a spanner in the works if you're not careful. Yeah, so life events like these have their own specific rule books. For example, if someone moves into a care home, their final 36 months of ownership qualify for relief, not just the usual 9. And here's a quick did you know for you. A new rule from April 2023 gives separating couples up to 3 years to transfer property assets between them without creating an immediate capital gains tax bill. That's a really helpful change.
Okay, now for one of the biggest traps of all. If you do owe any tax from your sale, you are on the clock. The second your sale completes, a 60-day timer starts. You have to report the gain and pay any tax you owe to HMRC within those 60 days. Miss that deadline? You're looking at an automatic 100-pound penalty plus interest. This is a deadline you absolutely cannot ignore.
So, you've done the maths, you know where you stand. What next? How do you actually go about claiming your relief? Let's cover the practical, final steps in Section 6.
Here's the process in a nutshell. First things first, if your sale is completely covered by full relief, you actually don't need to do anything at all. But if you're only getting partial relief, you have to follow these steps. You'll calculate your gain, work out your relief, and then report it all to HMRC using their online service, all within that 60-day window. And a final really important point, keep all your records for at least 6 years. You never know when HMRC might come asking. So, does your situation feel a little complex? I wouldn't be surprised. As you probably gathered, the basic idea of this relief is simple. Live in your home, sell it, no tax. But as soon as you throw in things like renting it out, owning another property, or going through a separation, well, it can get really complicated, really fast.
And that's why, for real peace of mind and advice that's actually tailored to you, it's always a good idea to talk to an expert. The team at My Tax Accountant are specialists in this. You can get in touch with them directly on WhatsApp or by phone at 7854-255-375. Or you can just drop them an email at info@mytaxaccountant.co.uk. And hey, for more guides like this, don't forget to hit subscribe on their YouTube channel. Thanks so much for tuning in.